Welcome back, everyone. My name is Adam, Rusmin.
Hello.
Victor.
Hi, everyone.
Thanks for joining us. And we're going to talk about what's happening in the markets. Recently, it's been a crazy few
roller coaster
days and nights, right? And if you've been following news, like the tariffs are being like thrown everywhere. And the markets have just been
completely out of whack.
It's just like something's happening. All right. So if you're in the market and you're looking at your portfolio right now, it's like some of you may see like the REITs coming up. And if you're like a little bit kanchong or anxious, what should you do right now? So this whole roundtable is about what we should do in times like these and how you can actually handle all of that. So why don't you just give us an overview of what's happening?
So just last Thursday, I think Trump actually announced a whole I think he just basically took out his tariff bazooka. He's going to tariff every country, right? And China, I think, come out to be on top, all right, at about 34%. Of course, not the highest. You have countries like Vietnam at about 46%, and that's actually discounted from what he presented. He actually been kind enough to this country to give them a 50% discount.
He's kind enough.
It's a good market, though. Right, and then you have countries like Taiwan also, which is an ally of US, 32%, and the whole list goes down, right? So he's going to tariff every countries except those Canada, Mexico, which I think they are still ongoing with the on negotiation.
Okay.
But basically I think no one is literally spared. All right, except Russian. No Russian at least yet. Okay.
No Russian or North Korea, I think.
And
the thing about this list is that it's really interesting. Is no particular order in how he arranged it. It's not alphabetical. It's not based on the how big your tariffs are. He just kind of like threw it on the board.
Actually, there's a way that he came out with the calculation, and I think the White House is thrown out this formula or the Greek formula. This is how they came out with the tariff.
It's a reciprocal thing, right?
Basically, what this formula, if you are very good at math, it's kind of like cancel out each other. So which means that they want country that trade with US to have a balance
to correct the trade imbalance.
So there's no trade deficit. So how they come up with this number is actually if you look at the top trade balances on the US trade deficit against China as of 2024 is about 270 billion, and US import from China is about 400 billion. So there's actually a trade deficit of about 131 billion. So what he did is very simple, right? US trade deficit for that particular country divided by the US import from the amount of imports that they come from that country. And that's how he came out with that 67% for China, and then he gave a discount of 50%.
Elementary school math.
Elementary school math.
For economics.
Yeah, that's why a lot of economists went nuts. This is too simple.
This is primary school math.
But the whole idea of why Trump actually did that is because he just wants those countries to go back to the negotiating table and start to come up with an offer what they can give it to the US.
So because of this, basically the markets have been just free falling. Especially in the US. And if you're following the NASDAQ, that's fallen the hardest so far. So let's just what else is there about this whole thing?
So I think China hit back over the weekend with 34% tariff on all the American imports, right? And I think EU is actually basically talking about retaliating also. I think they might potentially even tariff the service import tax. Basically those are services that may not be product based, but it may be subject to tax.
So US services into EU.
So they don't consider those as an import, but now they are considering that as an import. Right. So a lot of things are very dynamic now. So a lot of countries, like smaller countries like I think Singapore, we are basically saying that we're going to negotiate, right? So Japan also the same thing. I think France says that they asking the EU countries to stop US investment to retaliate, right? So I think we don't know what likely going to be a retaliation, and by the time you watch this video, maybe some of this announcement will come out. Right, because things are very dynamic even at the time this is recording, right? So small country usually you don't have bargaining chips, right? So you really have to like offer something back in US to US in return, right? So at this stage, I think the investors are basically says, oh no, the whole supply chain dynamic is going to shift, because if you look at like companies like Nike, for example, right? So they have I think 50% of their shoes actually manufactured in Vietnam, and that will cost them more. If they were to manufacture in Vietnam and then import it into the US, and at the end of the day, I think American consumer will pay for higher Nike shoes.
If Nike wants to basically still, I guess, stay in business and make a profit, they have to raise prices.
Correct. And that not only affect Nike but the whole industry like Adidas, Lululemon, and everybody, right? So at the end of the day, I think US consumers will have to bear for higher prices for all these consumer products. Even for Starbucks, right? So you have like coffee bean that's actually being imported into the Indonesian market, and that will cost more. So the entire supply chain might shift. right? And that is going to take time. That takes a lot of money, and that's why now investors are basically just dumping their share because they're scared that will hurt the consumer sentiments. And when the consumer sentiments are hurt, their spending will cut back, and when their spending is cut back, all right, US businesses again, their earnings will drop, and then of course they will pause back on hiring, and all these vicious cycles start to come in, and that's how recessions start to form, right? And that's generally what we are seeing right now. Of course, there are some exclusion in the list for some of the companies, like if you're in a pharmaceutical product, I think you're exempted from that. Semiconductors, although not very clear, right? Yeah. So, but there are certain sectors that are actually being exempted from this tariff inclusion, right? So I think right now, basically what market we are seeing is that everybody dumping the share, and VIX index now is actually at all-time high, which has crossed above 40, not all-time high, right? But it's kind of like region where you kind of know that market is panicking. So if you look at the valuation for S&P 500, I think technically speaking, I think we have seen one of the biggest sell down since COVID, right? So S&P 500 is down about 17.4% at the time of this recording on Monday, right? So
peak to trough drop.
Yeah, peak to trough drop, right? And Nasdaq is about 21%. So technically, Nasdaq 100 has entered a bear market.
Yep. But the S&P 500 is not in the bear market yet.
Yeah.
But maybe after this recording come out, maybe they will go into the bear market. Okay. But I think we also need to remind you that I got a table over here. It's like 5 to 20% drop, right? 20+% drop below 21%, right? It happens 71% of the time in the whole history of the US, right? More than 21% drop happens 29% of the time, right? Okay. So it's very common.
This is based on S&P 500.
S&P 500.
This is basically whenever the market drops, 71% of the time it drops about 5 to 20.
Yeah,
and
correct. Between that range.
Then the rest of it drops.
Correct.
More than that.
So do not panic. Right, that's the first thing I said, right? Okay. Because I think a lot of people is trying to a lot of people are selling, but there's also people who like, I'm going to buy into the market right now, right? But then if you were to look into, I have this like the history of the length of the S&P 500 bear market, right? Yeah. On average, it's about 340 days. Okay. So that is about less 11 months. Yeah. Right. Yeah. There's another data by the First Trust. It's also 11 months. Okay. So it's roughly about there. Okay. But if you look at all the different years, right? I think the fastest bear market was actually COVID pandemic. That was 32. That is an abnormality, right? It's not normal, right? But on average, I would say at least 6 months, right? So if you are so eager to buy and go buy into the market right now, you may expect further decline. So be patient, just take our time, base everything on valuation. That's what I'm trying to say. Don't panic. Let the valuation serve you. And all this.
Right now, even at the time of this recording, I think Hang Seng now dropped about 10%.
Yeah, correct.
Right. So
it's
a big
Singapore
drop.
market dropped about 8%.
8%. Right. So the market is really very dynamic. So like what Peter said, I think you have to look at the fundamentals. So I think if you go back to the fundamentals of the index itself, if you look at S&P 500 PE multiples, I think that we are actually very close to the 10-year average. Right. And the lowest that it went, I think during the COVID was like 16 times. Right now it's at about 24 times. Okay.
Still on average, actually.
Still on average level. So it's not like extremely cheap kind of valuation because US actually, if you recall last year, we talked about it. Valuation is our all-time high. And it fall from all-time high, but now it's still like average, right? It's a 10-year average level. So it's not the time where you should like, all in. Let's say if you are started to have some idea that pop up in your watch list, let's say it hit your price, you can start to nimble, right? And allocate down. Be prepared to go down because you don't know how the other country is going to retaliate against United States, and things might get worse. And if it get worse, of course, be prepared to really like average down along the way.
I mean, they are average now, like Rusmin says, because the last year we are net seller of the US market since 2024, right? Because if you go back to our past video, you'll know that actually they are traded at one standard deviation above the average last year,
which is very sensitive.
Yeah, so we are clearing a lot of positions last year, and
did
now
you clear or you just trimmed?
Sorry, we trimmed the position. We trimmed the position, right? We do a haircut on some of our stocks and all this, which we feel that was expensive, like IBKR, Alphabet, and all this, right? And now it has fallen. It's still at the average, so it's not really a screaming buy, but then of course there's some stocks that are in the market that are already fallen more than the S&P 500.
Okay. So now, of course, things to do is stay calm. All right.
Yeah. Turn off the news.
Turn off the news. If you're scared, stop looking at your portfolio, your broker app. All right. And then you're gonna see a lot of rate. And when you see last Thursday, Friday, the kind of drop. Some of the stock that I saw hit circuit breaker, right? Which is exactly what we've seen during the COVID pandemic, right? But it's not the kind of like global sell down. Yeah, now we are starting to see it, right? Valuation in the US is falling down, which is good, right? And it opens up, a chance for those people who are trying to enter the US market, right? And we might not be at the worst time yet. Like we don't know whether you're gonna get worse, right? But right now is the time to stay calm.
And
right?
thank Trump.
I think he's creating a lot of havoc. And don't try to time the market. I know this is exactly the time where if you read the news, some people will tell you that the worst is yet to come. All right, you will see articles like that coming out. All right, and things could get a lot of jobs will get lost. Right, potentially. So right now is really like stay calm. Of course, you should have been preparing cash few years before today. Like at the time of this recording this video while watching this video, you should have a lot of cash where you're ready to stand by to really start to deploy some of those companies that you have in the watch list. If you don't watch this, how?
Join us. But we're not open right now. I mean, some of you may have known that. We do talk a bit about investing. Houses and all that.
So we have some ideas that we've thrown up in the past also in some of the roundtable as well. And then of course it's also the time where you review your portfolio, look at those companies that you have in your portfolio, and then see whether the recent tariff will affect those companies, right? So I think the key things to ask yourself is that whether some of these companies will be affected in terms of cost structure. Right, I think if you own Nike, for example, then that will be affected. Right, then does Nike have the ability to raise prices? These are the questions that you need to ask yourself. Right, so I think, and then of course, some companies may not be affected. Like I think, for example, Microsoft. Right, so they are a service-based company, but if you retaliate against American tech companies, then they might potentially put in a tariff on those service revenue. Right. So those are risks that are possible, and if that happens, then of course you see those service-based company might drop even more. Right, and that could be a good time to load up. Okay, because if those are the essential service, even if you put on tariff, the companies have to absorb it. Then this company usually have a very strong pricing power. Right. So these are the kind of assessment that you want to be in. Right.
Yeah,
so
I think those critical type of industry also is can be also take a look, because it does not matter if there's tariff or not tariff. If it's critical, then people will have to what? Or that's why we have the past few years we also have been talking about investing in domestic business also. Right, because you don't want to do the export and import and all this. It may hurt your business. And I also think that high end luxury also may recession proof from this tariff. Why? Because I think let's say example MS, right? They usually is sort of like more high end and for the rich people to get. So they already rich already. Ferrari, right? They already very rich. To them, this tariff is just small.
No, they may like it. Oh, it's even more expensive. I can buy it.
I can buy it.
You can't. It's a flex. Okay, but anyway, so you think luxury less so affected.
High-end luxury.
High-end luxury, not
not your LVMH.
Okay. And if you're investing in REITs, of course you have to ask yourself whether the REITs will collect less rental income. Most chances are high that they won't, because if let's say they have this lease agreement that they agree with the landlord, for example, retail REITs, right, like Capital Land for integrated commercial trust, for example, right, then they will continue to pay the rent, so they are not really affected, but they could potentially be even benefited from the potential crash that we are seeing, and interest rate might drop. So that will help in terms of financing cost. A lot of things are moving, right? So at this stage, you really have to really look at your portfolio and review case by case, right? And those that are affected badly, obviously, you have to make the call. Whether you want to keep it, or you want to average down, or you want to like exit and then switch into a business that is more resilient, right? In time of crisis, right?
So I also think that despite we say to avoid some tariff affected businesses, right? But I think there should be some small percentage, maybe 10% or maybe 15% of your portfolio should be owning all these tariff affected one, because my take is that usually these are the companies that are very, very badly hit, right? But the moment the tariff is gone, they are the one that will jump up very, very high. They will get the highest return, because they are usually beaten down to the very, very bad valuation, very distressed.
So this is you're playing on the turnaround play.
Yeah, correct. So, but you must have a longer horizon, right? That eventually Donald Trump won't get re-elected or so. You never know, right? You never know, right? And the tariff, he managed to negotiate and they removed it. You never know. But then you know that eventually all this tariff may disappear and they will just come back.
Okay. So just to summarize so far, there's lots of bad news in the market. So there's so many things that we just shared. So for those who have been following, a lot of bad news in the market. Markets are coming down, but it doesn't mean that you have to jump in right now.
Yes, correct.
Because you can look at valuations.
Yep.
So at this point, the US market is not exactly cheap.
It's fair.
It's 10-year. It's at the 10-year average. So you can still wait. But we're not making a prediction. Because we don't know what's going to happen tomorrow. Could go down, could go back up. But we don't know. But just based on where it is now, it doesn't mean that we're going to jump in.
I think looking at the pace of the drop, I think we are more like a net buyer for this year. If the pace continues to drop, I think this week, then chances are very high that we probably will be in a very attractive valuation. Because as US market officially might enter the bear market, S&P 500.
Yeah, correct. So to continue from your point is that, I mean, because all this issue just happened only. The market start crashing just happened, right? Based on our experience in the past, that we've gone through many crises, right? Usually if it happens and you buy, right, it tends to still continue going down because like I told you, it takes 6 months to everything to hit the bottom and all this.
So you're saying just be patient, but even if, let's say, it rebounds tonight, tomorrow, it's okay because it's not exactly cheap. You didn't really miss out on anything. It's okay, right?
Some of them are cheap. Just that you really need to look at the individual company valuation.
Okay.
Right, and then decide from that point of view, right?
So
but generally as a market,
level,
it's not like super extremely
You're
cheap.
not saying that it's screaming at let's buy now, let's buy now.
So step one, just remain calm, patient, look at valuations. Number two is that you want to look at the companies that, like you say, the valuations, whether it makes sense, and whether they're going to be affected
correct.
significantly by the tariffs. So some companies are not so affected, then maybe it's just business as usual. Some are really affected, then you can make a call. Apple, Nike, Starbucks, these have more imports coming into the US from other countries, which would just change their entire cost structure. So that's another thing you do. So that's the second step, right? Yeah, and then after that, basically, I guess you just wait and see what happens. You don't have to basically run for the hills or anything like that.
So what we are doing now is that basically we look at the companies, list the companies that we want to buy, and then we'll just plan if this company hit this valuation at this price, we will allocate this tranche. And then if it continue to drop, we allocate second tranche. So this is the time where you should be sitting down and look at the portfolio and plan that entry strategy. It's a time where I think window is opening. It's not a time where you should be selling, right? Because if you sell now, when the market starts to recover, you're going to miss the boat.
Okay, so I think we teach all of this in our courses as well, how you basically plan your tranches, how you invest. A lot of it is in psychology as well, which is something that you have to learn on your own.
Correct.
Because, I mean, you can know all these things, but if your emotions are
roller coaster,
it's going to be hard. So sometimes you just have to go through it, go through the fire, I guess. So at this point, we just have to basically follow the steps that you listed out here, and just take it one day at a time. Take your time. I mean, sit back, relax, watch the market unfold. Only when it's good valuation, then you start to be more active. Okay, so basically the valuations will be your indicator of when you should go in for a particular stock, assuming the fundamentals are great for that company. Right.
But I want to remind all of you is that, I mean, yes, it may be scary and it seems like it's like end of everything or something like that, right? I mean, we've been through a lot of crises, right? But eventually, if you look over a long term, right, the S&P 500 always go up, right? So at the end of the day, is don't panic, right? Look at the valuation, buy good company, and just hold it for long term. That's all, as simple as that.
Right? And try to remove the emotion of it. I think I read a Reddit post where someone was saying, "Oh damn, my stocks have dropped 50%. Should I get out?" And it was like saying, "So you buy high and sell low?"
Correct.
Exactly. Some people are really they get affected by it. So I think having an investment plan to anchor what you're gonna do is so important.
And I feel the next few, maybe the month or the next 1 year, you should be more thrifty in your spending. You should be saving as much and taking advantage if the market get worse.
Because if a recession really happens, then jobs could be affected too. So you really want to save money.
So that's where you must have the emergency cash, right? So I think this is the usual. I think actually this one you should be prepared at all time, not even during the crisis, right? So 6 months of monthly expenses, right, including your mortgages or even car, right? Mortgages, right? So these are the things that you need to have on hand. And then of course, if you have any high interest debt, like your credit card outstanding bill, please pay it down. Make sure you are sufficiently insured. right? And then of course you should only invest the money that you're not going to need it in the next 5 years to 10 years, right? So if you need in the next 2 years, you need to pay for your children's education. The amount, then you don't put in fixed deposit.
Your bonds.
Or bonds, Singapore saving bonds, something like that, right? So you don't invest it. You only invest the money you don't need it in the next 5 years.
Okay.
Or I think safely 10 years.
Okay.
Yeah. So in that case, if there's a bad market down the road, like this thing really get worse, you won't get panic.
Okay.
Because a lot of time people when they invest, the money they're going to need in the next 2 to 3 years, they scared it drop. And that's where they start to panic.
Okay.
Yeah.
All right.
So these are the basic things, personal finance, that you need to get in order. Right, when you're investing for long term.
Okay.
Yep.
Yeah.
So right now, I mean, it's still very early days. In
Yes,
this whole,
correct.
like crash. Can I call it a crash? No, I don't know. It's still early days.
Mini crash. I think it's a mini
It's
crash.
not yet
Almost
crisis
a
yet.
mini
Almost. We'll see how it happens. So it's very dynamic. We don't know what's going to happen.
Yeah.
This video is going out because we just wanted to reassure those of you who might be really anxious about what's happening.
Yeah.
Just to remain calm, and these are the things that you can do.
Yep.
But then moving forward, as things develop and change, then we're going to do more roundtables about what we are going to do with this whole, the whole situation.
Yep.
We might do a roundtable on things there's the particular companies that we're looking at, how we could invest.
What we will do with $100,000.
Yeah, how will you invest $100,000?
We did it in 2020. I think a lot of them have. I think at least double.
Yeah. So we could do something like that. If you're interested, just let us know if you want us to do a topic like that. Like
only when the market becomes cheap.
I mean, definitely when the market becomes cheap,
Yeah.
then you say, oh, this is how I would invest $100,000 now.
Yeah.
That would be pretty interesting as well.
Yep.
Yeah. Again,
Okay.
we could do that. So we'll see what happens. But then if everything rebounds, like let's say everything changes overnight, because you never know.
Never know really.
Then nothing much to do about, right? So we really don't know what's going to happen. Can't predict. But yeah, just stay calm.
Yep.
All right. So is there anything else you want to guys?
That's all for me.
No.
For now?
Yeah.
Okay.
I hope continue to go down. I know some of you will be panicking because you have a lot of money at stake. We also have money at stake, but there's a time where we can put our spare cash to use.
Yeah, that's the thing. I think if you don't have cash now, you'll be like, shit. It's like it's going to be painful because you can see your holdings go down, and you don't have more cash to like buy cheaper stocks. That's why you should always have some.
You should be a net buyer
in
such situation.
Yeah. Okay, so we'll see what happens, and we'll update all of you who are subscribed to our channel.
Yep.
What's going to happen? So if you're not yet subscribed, then of course subscribe, and then we'll find out. Along the way. So is there anything else?
No.
Okay. So my name is Adam, Rusmin, Victor. Thanks for joining us. Any questions? We were happy to answer them in the comment section. Of course, subscribe. We never know what's going to happen next. And if you like this roundtable, please hit the like button, and we'll see you around.